All right, well, we're taking a deeper dive into the US labor market this morning following that latest jobs report. Now, the US economy saw employers add 223,000 jobs in December as unemployment ticked down to 3.5% and wage growth fell to 4.6%. We're here to break down some key takeaways on what this latest print means for the US economy and, of course, the labor market is Giusto Economist Luke Pardue. Luke, thank you for joining us this morning. So, we've been throwing around this term. It's been this sort of Goldilocks effect when you look at the markets latching on to what we saw with moderating wage growth, but still keeping an eye on what we've seen with the headline number there, 3.5% and a stronger than expected jobs number there.
Hi, thank you for having me. And I think that's exactly right. I would actually describe this jobs report as a Goldilocks report as well, where we've seen solid employment growth, just a bit higher than expectations, but we have been seeing that wage growth moderating. We saw 223,000 jobs added this month, a little bit down from November's number. And if you look at the long-term trend, we've been seeing this sort of slowdown in terms of jobs growth. The report actually estimated that last year in 2021, we saw about 562,000 jobs added on average per month. And that number came down to about 375,000 jobs added per month. So we're still seeing robust jobs growth. Federal Reserve Chair Jay Powell estimates we only need about 100,000 jobs added per month to tread water. But what's encouraging is to see that wage growth has been moderating just a little bit because those policymakers have been keeping an eye on that as they think about wage growth fueling inflation.
One other thing we also saw was the labor force participation rate tick higher. I mean, very slightly, but it was higher than what we got in the previous report. I mean, what does that tell you about the potential for a soft landing and sort of the best case scenario here, but being able to keep a strong jobs market while still slowing things down a little?
That is actually a number that I am very keenly keeping an eye on. I think you sort of have to squint to see that labor force participation rate rise this month, although it is encouraging that it did rise, but we're still about a percentage point below the level that we saw in February of 2020. So in order, as you say, to achieve that soft landing, to see robust jobs growth with a little bit of moderating wage gains, we do need a lot more workers to remain or to come back to the labor force, maybe thinking about older workers who retired or prime age workers who are having to deal with remaining childcare issues. And you know, in order to see a lot more employment growth while not necessarily needing to see wage growth, that labor force participation rate will have to at least return to where it was before the pandemic.
And Luke, what about the distinction you're seeing between what's happening with large companies and small to medium-sized companies? We know in that latest ADP report, they found that large employers cut about 151,000 jobs. But when you look at those with less than 500 employees, they actually added about 400,000 jobs in December. What does this mean for the overall labor picture?
Sure. Yeah. So at Giusto, we serve over 200,000 small and medium-sized businesses across industries and across all states. And so what we're seeing on our platform is a bit of a slowdown in hiring, that employers are starting to tap the brakes on hiring, although they still are adding employees. On our platform in December of 2022, the hiring rate was about 4.4%, and that's down from the 5.5% rate that we saw last month. And we've also been seeing employers moderate those wage gains, just like we saw in the overall jobs report. The annual wage growth among companies on Giusto was about 3.9%, and that's down from 4.7% last month. And that's actually the first month that wage growth was under 4% on our platform in 15 months, since October of 2021. And so what we're seeing is that a lot of small and medium-sized businesses are tapping the brakes on hiring amid economic uncertainty, but they're still adding employment. And what we're also seeing is that the employment growth is centered in leisure and hospitality, in healthcare and social assistance, just like this overall report. So a lot of what we're seeing among the overall numbers is actually reflected on Giusto's platform as well.
And what kind of indication do you have from those on your platform that this pace will continue? So you say tap the brakes on hiring, but still hiring. When you think about job cuts, it's still largely been focused in the tech sector. Any indication that that could really start to spill over in a big way into other sectors?
Yeah, I think that's the big question. That, you know, as the Federal Reserve raises rates, we've seen the initial effects in interest rate sensitive industries like professional services. On our platform, the hiring rate in technology fell by just about half, from 5% December of last year to 2.6% in this past December. And you know, the real question is whether or not those layoffs are starting to affect other industries, and particularly personal services. I just spoke to a bakery owner who said that they're based in San Francisco, and they're starting to see the initial effects of some of the slowdown in hiring among tech companies because they need to get creative in how they're marketing some of their goods and pricing it. They actually just released they've been making cakes, and they released a less expensive taster pack in order to prop up demand, and they're having a lot of success with that. But that's kind of the initial way in which some of this softness and professional services that we've been seeing in the overall report could spill into personal services. Thankfully, we haven't seen that in a more widespread way. We're still seeing robust jobs growth in food and beverage and accommodations, but we're keenly keeping an eye on that in order to make sure that we don't see that sort of softness spill over into other industries.
Yeah, certainly hoping that that doesn't trickle down, as you say, into some of the other sectors. Luke, it's good to talk to you today. Luke Pardue, Giusto Economist, joining us there.